when you have an exchange and a set of exchanges and markets that are really rooted in trust, and if you don't trust the exchanges or the markets, why would you want to leave it there? Which is exactly why we have been seeing all of these deliveries and a lot of it leaving COMEX. We saw 39 million ounces of silver leave the COMEX market in February. That's 2 million pounds of silver get on trucks and go. We saw a week ago Friday, 2 million ounces of silver leave the eligible category of COMEX. So that's silver that's not even backing the bars that are being listed. We're seeing metal leave all of these exchanges, and a bigger indictment, sovereign nations repatriating from the Bank of England and the New York Fed, where for 50 years gave them direct access to the most liquid markets in the world, the LBMA and the COMEX. These countries, like France, would say, screw it, I would rather have my metal here at home, even if it means I'm less liquid, because I don't trust you. And you look around states and they say, do we trust holding treasuries? Look what happened to Russia. No, we don't. In fact, gold is outperforming the treasury market and it has no counterparty risk. Do we trust leaving our metal at these old exchanges or the banks, the Bank of England, New York Fed? No, we'd rather take it home. Do we trust the administration? Do we trust the geopolitical and political aspirations of the United States government? Do we trust their markets? Do we trust anything anymore? And a system that is largely based on trust, you and I were talking offline about being real, being honest, being fair, being authentic, and how rare it is to see that nowadays. People are cynical. You and I grew up way back when in Minnesota where that was a given. Everyone was honest and sincere, and Minnesota nice. Now it's like in the world we live in, trust has to be earned. And I think there are low on the trust totem pole right now with a lot of the things that we are doing around the world, and a lot of the things we're doing here at home. We're fiscally irresponsible to boot. So who the hell would want to hold our treasuries that are being literally inflated away at a massive clip by an administration and by institutions that people are looking at and saying, geez, I think I'd rather remove any and all counterparty risk. I think it's only going to get worse. And I think counterparty risk will be one of the dirtiest words of this decade before it's all said and done. That's when we get into the conversation of David Rogers Webb and the Great Taking and all of the things where things that we think we understand and as being true in a very leveraged economy can unwind like that. And as bullish as it was for 20 years of the Japanese yen carry trade, with rates at zero, allowing assets to be bid way up in a low interest rate environment, those asset prices, as bullish as that was, it's 10 times more bearish when it's unwind, because when it's moving up, it's in an orderly fashion. When it comes down, it's panic and everyone's shoving through the door at the same time. And it's something like this, a prolonged event that can really start to create problems in the economy with much higher prices that lead to much less in the way of corporate profits and layoffs into an already sluggish economy, indebted and underinvested, enough savings, too much debt and speculation. Look at the private equity markets. And another thing people aren't talking about too is the Fed just called in all of the heads of the banks and said there's this new AI program that hasn't been released yet. Forgot the name of it. It just last week. And they're very afraid of where AI is going, because there are all of these banks. They said, look, you have all said your software is pretty much impenetrable. And for the last 20 years, all sorts of human, I use as quotes, humans analyzing this haven't found any hole. They haven't released it yet, but this new AI, I think it's called like Amorphous or something along those lines. And you Google, it'll pop right up.
It's the owner of Claude and Anthropic.
That's it. Thank you. And that they're very afraid because it found thousands of holes that no one thought was there. This kind of stuff is going to fall into bad actor hands. And, what happens when you start to get this kind of problem that affect people really, really affect
It's a good thing, though.
States.
I think it's a good thing that they're actually doing, because now they're releasing it to, the one thing I don't like, though, is because you can't even trust who they're releasing it to. But
they released it to Jamie Dimon at JP Morgan, right?
Well, they released it to like the 30 different corporations, also the big tech guys. the big tech companies and the big banks, but what about all the little guys, right? They don't want to release it in general because they don't trust people, so they're trusting just the big institutions. So now they're going to get this huge advantage and whatever.
Do you know how much JP Morgan spends on security for IT each year? $1 billion or more. And so what does that say for every mid-sized company in America that has digital platforms? I wonder. And so these are, and when we talk about all these things, from oil to trust to AI technology to IT, so all of these things in and of themselves are relevant. We put all of these things together in the environment, very hot mess where everything is a potential trigger to create a systemic chain reaction in all sorts of areas that none of us are even thinking about. And I say this with great sincerity that I think if you are not a contrarian right now, you are bound to be a victim. And whether you buy gold from Miles Franklin or not, the way to be as far away from this as possible is to be as analog as possible in the form of assets in your own possession, whether it's Bitcoin in your own possession, whether it's art, whether it's cars, whether it's gold, whatever it is. Assets in your own possession right now have never been more important. And you know who's showing you that by the playbook? The biggest money in the world.
That's right.
Changes and pulling it back from all of the world's primary, exchanges or holding points like the Bank of England, New York Fed, because they don't trust the system. And I don't know.
You know what I did? I spent, before getting ready for this show, I went to a bunch of different AIs and I said, okay, what is the most underreported geoeconomic issue that's going on around the world that people in the United States do not learn about or are not hearing about?
Oh, that's a good one.
Yeah, and I did it I do that on a regular basis. And consistently at the top of the list are the countries right now that are standing for gold and moving to doing gold as a currency hedge and moving away from the dollar. And it said that is the number one. And this is from all the different, this was this week. It didn't say that weeks past. This week it said that. And it said
I've been saying that to you for 3 years, 4 years.
You've been saying it's Andy Schectman's words. But now the AIs are telling me it's the number one economic global thing going on right now in the backdrop that nobody in the mainstream is talking about. And all these countries are doing it. And I said, okay, well, who's doing it? What countries are? And it just listed a slew of them. They're all moving in that direction. And the Iran war is accelerating it.
Can I tell you why they're doing it? And it's interesting when even people who are this way would listen to that and not maybe understand really what you're saying because, well, they want gold. They're looking for an asset going higher, blah, blah, they don't trust the dollar. Okay, but let's expand upon that. Really, what they really do is making a very big statement in that what is gold other than a 6,000-year-old agreed upon by all of human civilization form of wealth, right? What gold is, it's the only global neutral reserve asset. Neutral, meaning you can measure every single thing on the planet in value against it worth. How much is that ring, Sarah? How much is that piece of artwork? In what? What are we measuring it against? Valuations are not arbitrary. Is it in dollars, in euro, in pounds? Are you measuring it in, what are you measuring it against, right? In the United States, we have a hard time understanding that because we grew up with everything valued in dollars. If at our age before the euro, you grew up in Italy, you can get into a car and be in Switzerland in 30 minutes or in France in a couple hours, get on a train and be in London in a few hours. So every one of these countries had different currencies. You understood how things were valued in other currencies. In the United States, we don't quite get that. So when we talk about what gold is, number one, it's a neutral reserve asset by which everything else is measured. Number two, it's an asset that has outperformed the 10-year treasury by a double 25 years over the last 2 years, a factor of 10 times. The last 2 years, each year, about 10 times performance better in gold. So in essence, these countries are looking to gold, in my mind, not as a settlement status, but I can nerve that a substitute for the gold. And the way they're doing that is through alternate payment systems. To your point earlier, multipolar. All of these countries are signing up either for mBridge or what China just did with the countries in Southeast Asia, the acronym ASEAN, Asian, 800 million people, twice the population of the United States. China's largest trading partner by far, are all signed up to Asian, which means they will trade with China using their own local currencies over a system that not only using your local currencies, it builds their own monetary system instead of ours, trade over a system like SIPS, the cross-interbank payment system, or mBridge, both of which are not compatible to SWIFT or the dollar, which then allows them to settle imbalances in gold instead of treasuries. Now, if you are not trading as much in dollars, you chip away at the dollar settlement system. And if you aren't holding as many dollars, you don't need to reinvest them into treasuries, meaning you're chipping away at the reserve status of the dollar, little by little by little by little. And so gold is not being used as money, but is being used as an alternative form to settle imbalances in trade and in currency and in investment. And the way that they plan on doing that, China is doing, is the expansion of the Shanghai Gold Exchange. First one just got completed in Hong Kong. The significance of that is that when gold leaves China, it must by law come out of Hong Kong. So the second one is being built in Saudi Arabia, who is one of the 5 participants in mBridge, the digital cross-border payment system. So whether it's mBridge or SIPS, these countries will trade their own currency over platforms that the US and the West cannot interfere with. And then they will settle imbalances in gold because they are going to build vaults all around Africa and Asia, in the Middle East, in the Belt Road, to settle imbalances and sprinkle everyone's gold through each of these vaults so that, look, the way that they're doing it now, China just said, look, you do not need to convert to dollar. If you're a government and we pay for something in digital yuan, you can immediately convert to gold like that out of the yuan to the Shanghai Exchange. So Saudi Arabia sells their oil to China, pays for it in digital yuan over mBridge or SIPS, not compatible with the SWIFT, no interference. And then China or Saudi Arabia can say, you know what, I want gold. I'll send it back. I'll send the yuan back and immediately convert it into gold in the Shanghai Exchange, take delivery through Hong Kong. And in a few months, be able to take delivery in their backyard in the vault being built in Saudi Arabia. It will be all throughout the Belt Road. So gold will be what they use to settle imbalances in currency and trade.
Yep.
Their own currency will be used for trade.